Hi everyone, welcome to this video and my channel. So in this video I'll be talking about my real life portfolio. So I'll be revealing my 78K portfolio and let's go. So I'm not a financial advisor and watch this video only for entertainment purpose. So this is an overview of my portfolio and it can be categorized into four different types. So the first one can be 401k, the second one is individual brokers, the third one is HSA, and the fourth one is Roth IRA. So most of my money in terms of percentage is in 401k, which is like 43%. Then comes the individual brokerage and the HSA and Roth IRA. So in this video, I will be going into each of these four categories and I will show you what I own in each of them. I'll be revealing all my stock that I have owned in my all of these portfolios and also some of the option contract that I have undergoing. So stay tuned and let's go. So as you could see, three of my four accounts are a tax advantage account. So meaning 401k, HSA and a Roth IRA, and there's a reason for that. So I'm a W2 earner and keeping money a lot of like higher percentage, almost 70% of my money in this account helps me to save in tax, and I can grow this money without interrupting the compounding. So that's why I like money in the this tax account. And I also have an individual brokerage account, which is almost 28% of my total weightage, and I have some stocks and options there. So talking of my performance, so I have been investing in the market since November 2021, and so far my cumulative return has been 116%. And if you compare that to S&P 500, it's sitting at 70%. And on an annualized basis, I have like 18% annualized, and over the same period S&P is like 12.3%. So I'm beating the index as of now, but no one guarantees the future. So this is a screenshot of my interactive brokerage performance, and you can see the same number I talked. So now let's come to the individual brokerage account first. And so this account has a total value of around 22,000, and I have different stocks and few of the leap option contract. So let's talk about stocks. I will not be going into too much detail about these stocks in this video, but I may come with another video explaining why I own these companies with their financial data, growth and everything. But for now, I'll just list them. So the first one is KPG, Kelly Partners Group. This is an Australian company and it's very similar to Constellation Software, but it's very small size wise. In like 200 million is the market cap of this company, and what they does is they hold software companies that are in a finance the account field. So they would buy these small companies and make a portfolio of it. The second holding that I have in my portfolio is PayPal. I like PayPal values, so I have 50 shares of it. Then comes the JD. JD is a Chinese e-commerce, you know that, and I have 40 shares of it. Then comes Sea Limited. It's a Singapore-based company, and it's a e-commerce company. I like this company at a value, so my cost basis is $87. I bought this like 2 weeks back, somewhere around that. I have been holding PDD. My average cost is 119 for PDD, and PDD has fallen right now. Its share is around like 79. So when it fell further, I bought a leap contract. I'll talk later. I also have two. This is brokerage company, Hong Kong based, and they also have an app in US. The app they call is Momo. It's similar to Robinhood. They also have been beaten down, and I bought few shares last week, I believe. And then I have few shares of Salesforce and Constellation software. I have Constellation software in all of my accounts actually. So maybe 3.5 shares. I will talk about that later. And now let's go to my option contract. So you can see here I have two Pinduoduo Leap contract and one Constellation, Adobe software contract. So when it comes to buying leap, I like to go to the farthest extent. So what I mean by that is the most time I can get to buy these leaps. And as you would be knowing, Adobe stock has fallen a lot, and when it was 207, just after the earning, I went and bought this leap option. So this is a 2028 contract, January 2028. And when I buy leap, I always want it to be above 80 delta and the farthest in the time, so that if there's a fluctuation in the meantime in a few months, it would not impact the long-term expectations in this stock. So I see a real value in Adobe. It's enterprise. If you see the ratio of enterprise value to the free cash flow, it's almost like 8 times, growing in a double digit. I like that. I like this valuation of the Adobe, and that's why I owned a leap contract. So I invested like 8,300 into this. The market further fell, and I am already in loss of 1,000. But it's not going to be sold. I'm not selling it immediately. I'll still keep it. Even if I want to keep more than 2 years, I may do option rollover contract, and I see a value in this, so I'll keep this for now. And I also have Pinduoduo. So as you could see, PDD also fell a lot, and I bought this contract when the share price was around $80. So same with this, it's a 80 delta contract, and it expires in January 2028. So I have my strike price is 50, and I have invested 7,000 in these two contract. So we'll see how these two options goes. So let's come to my Roth IRA. Here you'll find a lot of software companies. I have been buying the SaaS software companies like ServiceNow, CRM, Constellation Software, Intuit. I see real value in these companies. They have been beaten due to AI fear, and I like these companies at this valuation. So before, in this account, all my money was in United Health. I bought it at the time when the CEO was assassinated, and I made like 30% on this, and then I sold all of those United Health, and now I'm owning all of these companies here. So KPG, Kelly Partners Group, Pfizer, CRM, Now, Constellation Software, HR Block, and Intune. Now let's move to my 401k and HSA. So in total, both my 401k and HSA accounts to 48,000. So in my 401k, I have 32,000, 30, almost 34,000, and in my HSA it's 14,000. So what I have done with my 401k is, as I can't invest in the market myself, I can only, in my 401k, I can only do ETF or um, the S&P 500 and few other options they give me. I didn't like that, so I have all of these money in my T-bonds. So I'm getting like 2% there, but this is kind of a protection for me. If market falls, something happens to the market, either I can take a loan from this account, or when the S&P falls, I can invest at that time. Right now, I don't see a good value in S&P 500. I feel like it's little overstressed. So all of these money are in my T-bills. So you'd see at one, I'm buying options, I'm aggressive, but on the other hand, I'm really defensive. So these are again in my HSA, because I have a flexibility to invest in my own. I have on the stocks here. So again, as I was saying, I have Constellation Software. I also have United Health here, which I haven't sold, and I'm like 50% off here. Um, the other shares I have is WSC, again Intune. This is Wipro. It's an Indian-based IT company, and they have been beaten again because of this AI fear. I have some people here. AMR, Alpha Metallurgical. This is I cloned this from Monish Pobrai, and I also have Uber. I trust Bill Ackman on this, and that's why I purchased, and I see why he has done so, because if you again see the enterprise value to the net free cash flow ratio, it sits around 15, and I like this valuation. It's a growing company, 10-15%, so I like Uber. And if you see my return in HSA, it has been, lifetime has been almost 7%, and it hasn't been long since I joined the job, so 1.5 years. And something I really want to show here, and one of the reason why I'm buying a lot of these SaaS based software companies. So all of these companies are growing double digits, like mid-teen. Some are growing in 20% rate. And this, what you see here, is a revenue change from 2000 to like 5 year period, free cash flow in 5 year period, and the current enterprise to free cash flow ratio. So based on at the time of recording, this is what their ratio looks like. So Adobe is a company, it's growing, and you if you are buying it now, you can buy it at 7 point almost 8 times EV to free cash flow ratio. It's really, like, I believe it's undervalued, and same with other SaaS software stocks. So I loaded into all of these, and we'll see how this goes. So if you feel these contents adds value, and I'm transparent, you can subscribe this channel, and I'll be uploading all the other stocks or anything if I buy and sell on this channel. Thank you for your time.